All right, and we are live. So welcome back to Dapp University. So today we got a lot to talk about in our live stream. We're going to talk about first and foremost the crypto markets, because if anybody was watching this space over the weekend, things got pretty bumpy. If you got up this morning, was checking your phone, saw a lot of red on the charts, just trying to figure out like, hey, what's going on? What's going to happen in this space next? Because things are looking pretty dicey, pretty messy right now. We're going to look at a lot of other factors as to why this is potentially happening and what could happen next. So we're talking about that. Look at a lot of other updates since our live stream on Friday. Again, we do these Monday through Friday on this channel. Just subscribe, turn on notifications. You're going to find out about those whenever we go live. We're going to answer some of your questions and a whole lot more. So if you're around here, hey, I'm Gregory. On this channel, I turn you into a blockchain master. So if that's something that you're interested in, then smash that like button down below for the YouTube algorithm and subscribe to this channel. And if you want to learn how to master blockchain step-by-step start to finish, then definitely head on over to dappuniversity.com/bootcamp to get started today. So we got people jumping in the chat here. We've got, let's see here, Cody, Dale, David, Jacob, CJ, Jay Lee, Jai, I hope I'm saying that right, Automatic Beats, Ugandan Crypto Guru, Lattes with Luther. that's so funny. Let's see here. Arlie, welcome, Tina. So let's go ahead and jump into this. So let's talk about the crypto space. Let me know if y'all can still see me, hear me okay. I'm trying things with the bright light off in my face. Normally this morning, kind of changing my camera setup here a little bit. Hopefully we can fix this issue where my camera's been like automatically zooming in and zooming out and going dark. So if you can see me okay, let me know down in the chat below. We're kind of in a moody, dark vibe right now. So the lights will stay off until the bull market resumes. How about that? All right, so let's jump into this. Let's talk about what's going on in the crypto space right now, especially when we're talking about crypto assets. Because again, things are looking pretty dicey in the marketplace right now. If you're watching the space over this weekend, things were pretty rough. So let's kind of jump in. All right, let me just pull up my advanced chart here. All right, so pretty much across the board, everything got hammered over the entire weekend with maybe one or two exceptions, okay? So, Bitcoin dipped back down below $20,000. ETH was back in the $1,400 range. Lots of, mid caps and micro caps, or not micro caps, mid caps and smaller cap coins were getting just absolutely wrecked on a short-term time frame. So, we see Bitcoin's back, way significantly down below its so your 200-week moving average is a pretty critical level for people who are watching this, hoping that we get back above it and hold it as support, which ultimately we failed to do. We'll definitely cover that here in a minute. But let's talk about the actual sort of outside forces here, because at the end of the day, I'm not a huge TA guy. I don't like to sit here and just look at charts and say I know exactly what's going to happen next based on patterns, based on trend lines, based on all this type of stuff. I like to look at the external factors that are actually forming the prices, because at the end of the day, markets are about supply and demand. And if you have sound supply of cryptocurrencies, then the other side of the equation is demand. Why would people want to buy or sell these cryptos based upon external factors? And of course, the big things that have been driving pretty much all assets since the beginning of the year is what's happening with the broader economy. Everybody's been facing very similar headwinds, with the macroeconomic scene. And this is starting to develop more and more. We're seeing a clearer picture of what's actually happening right here now. And the headwinds are not letting up really in a way that I think a lot of people would like, okay? And so, one good proxy for this, we're talking about some specific things in a minute. One good proxy to watch out for, which has been pretty inversely correlated to the crypto markets, has been basically what's going on with the dollar. Okay, so the dollar has seen a pretty significant rise, as of late. Basically, when the dollar's going up, crypto doesn't tend to do well. Okay, there will be some smaller, let's see here, counterexamples of that. But generally speaking, the correlation of the dollar is heading the opposite direction of what happens with crypto. And we talk about that with, the dollar value going down when we see extra money in the money supply and a lot of that getting soaked up with crypto. But let's look at a interesting thread here that talks about what could happen with the dollar since it's broken past a pretty significant resistance line that it has not broken in a very long time. So this is a little bit of speculation about what could happen with the dollar, but basically if it keeps going it could, potentially break more things in the economy, not just crypto. Okay, so it basically has done a parabolic move. You can see what's happened with the dollar since June. Okay, this, is a curve upward. It's not a linear uptrend, and so basically, there's literally nothing until 120 if we break this week trend line. So you can see basically here's our trend line. We can see it's sort of peaking out above here, but then if you get past this, the next sort of stop after the show is past 120, maybe about 122, something like that. Okay, and deviation from the trend suggests it could get to 120. So basically, it's not good for oil. It's already $60 over value versus. Let's just say here, but it could cause a nasty week with risk assets, okay, particularly with equities and crypto, okay. Talking about equities going to be farther out on the risk curve, or the equities that will be farther out in the risk curve, and then crypto would be sort of an extra level beyond that, okay. So we're not sure if they will make new lows, but same with crypto. Could get saved by weak economic data this week, but also the bond market, okay? So if the bond market overturns, everything eventually turns. Bonds are their most overvalued versus the business cycle ever. Fair value is 1.5% and 1% lower in ISM if it hits basically 40 early next year. So, this could be something that gets pretty messy right now before all this stuff gets resolved. Because the whole point here is that we're just seeing more and more choppy waters ahead, and at the end of the day, markets really don't like uncertainty. Of course, crypto is a volatile space already, but I think we're highly correlated to what's going on with the stock market right now, particularly to the downside, okay? On this sort of bear trend that we're a part of. And I think what everybody's waiting for is basically just signs of, a wintry period ending and a sign of a spring starting where new life sort of shoots up from the frost. So where we can actually take some legs and form a new, sort of bull trend upward that actually has some sort of confidence rather than a potential just relief rally in a bear market, okay? But basically the whole point here is we're seeing more and more factors give us that headwind that produces that chop that makes that less likely on the short term, okay? On the short term, not necessarily, on a longer term time horizon, but, some of the other factors that contributing to this, when we're talking about, what's happening with the dollar, what's happening with the broader economic, data. We saw Friday that the, Federal Reserve, basically, we had our meeting at Jackson Hole. Let me just pull this up real quick. Anyways, we had our meeting last week at Jackson Hole. I don't know why this won't let me sign in, but talking about there could be more pain in the economy coming up, right? So that's at least the stated values from the Fed that came out on Friday. Of course, the markets don't really like that information. I think that's one of the reasons we saw sort of this dump over this past weekend, or definitely a contributing factor, okay? I think what everybody's waiting from every time, Jerome Powell or some member of the Federal Reserve speaks is, signs that, we're going to reverse course in terms of monetary policy, essentially a Fed pivot, because that's one of the big things that kicked off this, downtrend that we're a part of right now is really last November. Someone kind of saw the top in pretty much everything, okay, November/December, is because we essentially got a change in direction, like the entire, trajectory of the economy just like turned around. Okay, like the rules of the game just changed. Okay, we were playing a game that essentially, thrived upon easing, thrived upon growth, thrived upon risk and expansion. Okay, those are the themes of all those things, and those rules just changed basically overnight. All right, now it's kind of what caused the top and saw this decline that we're part of today. Saw repricing the stock market, basically talking about raising interest rates. Removing basically monetary tightening. Okay, I think everybody's sitting around waiting for a hint that the Fed's going to pivot, and then we will get back on track with sort of the direction that we're headed before. And we got no signs of that on Friday. Okay, and it looks like it's sort of like the you can almost liken this to, sort of Groundhog Day. We're like, they're waiting to see if the groundhog comes out of its hole and, to see how many more weeks of winter we're going to have left. but the groundhog decided to get scared of its shadow and go back in the hole. So I'm waiting for somebody to make that a meme every time we have a Fed meeting of some kind for Pakistani Phil. I'm sure there's a Photoshop wizard out there who could do that a lot better than I could. But anyways, that's what's going on right now. We did not see that. We're also seeing a lot of fear about what's going on with the energy prices over in Europe. Okay, this is just another sign that the economy pretty much across the world, particularly in Western countries, is just not really good right now. Okay, and it's hard to imagine, the value of our assets doing what they're going to do in a positive direction when everybody's feeling a lot of pain on multiple fronts, especially just normal everyday people, because that's who makes up an economy in the first place. Okay, we're talking about inflation as the big bad enemy, across the board. Again, I don't pretend to be a macroeconomics expert by any stretch of the imagination, but it doesn't take a genius to see that inflation's a problem. Okay, it's hitting everybody. It's one of the most talked about political issues, especially if you're here in the United States. We're in an election year. That's going to start heating up in full force. That could be another big factor that, influences the markets in a lot of way. But anyways, inflation is a big issue, okay? And, the Fed's out to fight inflation by every means possible. You know what I mean? That's sort of their mission here. Of course, the Federal Reserve mandate to keep prices stable and to reach maximum employment, okay? And so inflation basically usurps that mission. And so that's one of the reasons we see raising interest rates is try to essentially to curb demand to try to keep prices stable or to cool off inflation. Okay. So, this is a massive wrench in the plans here. Of course, this is for Europe, but still it's the same story across the board. Okay. We're starting to see terrible winters for next 5 to 10 years. And of course, this is with editorial without gas cap. Mostly just talking about the sentiment here, which is expressed from the European energy problem right now. So again, I'm not in Europe. I can't speak to what's happening on the ground here, but I've talked about this in my stream some. And, there've been lots of people in the comments from either the UK or other parts of Europe who can confirm, yes, this is a problem. So if you're watching this from Europe, let me know in the comment section below. Can you confirm, is this actually a problem? Everybody that I've talked to who's on the ground has said yes, can confirm, definitely is. So this is an issue too. Okay, so we're seeing all these signs that everything is just out of whack. Okay, and until we start to get some sort of resolution from everything being out of whack, till we get this sort of the shoots of spring start to come up through the frost. It's hard to get really, really bullish on short-term time horizons when you have all this chop and all this headwind here. Now, we do have, the Ethereum merge coming up really soon, which, of course, can play a factor in all of this, okay? I think it's one of the reasons that we do see assets like ETH kind of getting gobbled up after these dips. Okay, I mean, we went from 1,431 to, basically pushing back up above 1,500 pretty fast. We're going to see this pretty big spike up right here. I still think the merge trade in many ways is still on the table. All right, now the question is, how high can ETH go around a merge trade, assuming that we still have all these types of headwinds and factors on the table that I'm talking about here. But yeah, the merge trade is still on the table in my opinion. Again, full disclosure on this channel, I'm not telling you to buy or sell any crypto based on any of this information. I'm not telling you to try to get in on the merge trade, buy the rumor, sell the fact, buy the rumor, sell the news type situation. I am not personally trying to time the market with the merge trade, okay? I mean, I'm definitely care more about what's happening at the long term with ETH. I expect the merge to have some significant impacts on the actual economics of Ether, the asset itself, to where over the long term, assuming that you have essentially, sustained network activity, that's going to, at least sustain the demand for Ethereum or Ether, the asset itself, which, because of the merge and the actual the actual economic changes that are coming, which is essentially affect ETH's scarcity. It's going to become more scarce than it is now. That's going to have a long-term price impact. Plus all the other reasons why people want to hold ETH in the first place, like the ability to stake it. It gives you more reasons to actually hold it, which drives demand. So basically, you're attacking ETH from both sides, both supply and demand. All right, increasing the reasons why you want to hold it. That's demand going up, and then increased reasons why. Well, not increased reasons, but the supply actually decreasing over time because of ETH becoming deflationary. All right. So that's, so that to me is way bigger than a merge trade. That's the whole point I'm trying to make. Like the merge trade, let's just say the ETH did something crazy pre-merge. Let's say the ETH went to like $5,000, basically broke its prior all-time high for the merge. Like that's awesome, but I think the potential for ETH is a lot greater than that over a long-term time horizon. Okay. Now that's just my opinion. Okay. I'm not saying I'm not trying to set a price target for ETH by any particular date. That's not even really how I think about these markets. I think about them on long-term time horizons, and that the upside potential is higher on medium-term time horizons than pretty much anything else that I would want to personally hold with any degree of confidence. Okay. So I guess what I'm trying to say is like pretty much any stock that I want to buy and hold, I think ETH is going to outperform it on reasonable timelines. Pretty much any other asset that any other normal person would want to hold, I think it's going to outperform it on larger time horizons. Somebody says max supply infinity. How is this decentralized? So that's a good question. So basically, maximum supply infinity has nothing to do with decentralization in the first place, because what happens if you kept infinitely printing it and you distributing it to every single person in the network? That'd still be decentralized and it could still have a maximum supply of infinity. The other thing about it is people freak out all the time about Ethereum having an infinite supply. So you have to explain this. So basically, like you see the total supply on Ether here, and you see this maximum supply of infinity basically. So this comes from the Bitcoin camp all the time. That's where this came from. Bitcoin being a hard money that has a cap of I can't really remember the Bitcoin total cap off the top of my head. I could say something, but it's probably going to be wrong. So anyways, the whole point is like, people think that Bitcoin's superior because it has a finite supply. You always know how many Bitcoins are going to ever exist. And, the Bitcoin halving happens every 4 years. And over time, you just slowly approach that number, and less Bitcoin is mined every single year. And they say, hey, ETH is like worthless because it has an infinite supply. And, you could just, that's worse. So the implication here is that you can just arbitrarily print as much ETH as you want to, and it's just like a fiat currency in this regard, that somebody's just sitting here like pulling a lever, deciding when they want to make more ETH. That's not true. ETH follows a fixed issuance schedule. So if you look at like ultrasound money, you can see ETH does have an infinite supply, theoretically speaking, okay, but it has a predictable issuance schedule, okay? So if you see, this right here of about 5.5 million Ether every single year, like, yeah, it's an infinite supply, but you're always going to, so I can't see it on my screen here. You're always going to make the same amount of ETH every year. So basically, that's like you're going to make the same amount every year, and as the supply grows, that means the new amount of ETH hitting the market every single year as a percentage of the supply will go down over time if it's a fixed amount. So let's say you had 10 apples, okay, in a batch, and then you added one new apple every year, okay? Well, the first year, that's going to be a 10% increase. The next year is going to be a little less than 10%. Okay, the year after that is going to be even more or less than 20%. In 100 years, if you added one apple to that collection, assuming that it was still only, had only grown to 100, it was just going to be way more than that. But let's just assume it was a 100 collection, right? You added one, that's a 1% increase. The whole idea here is the percentage increase gets smaller if you add a fixed amount over time, okay? So that's how each issuance schedule works. But that's just the beginning, okay? Because then you have to add on the fee burning after that, and what's going to happen with the triple halving. So basically, like after the merge, ETH's going to undergo a triple halving, where the where the amount of ETH is created is going to get cut in half 3 times. And so we're talking about 5-something million ETH per year. Well, 0.6 million ETH per year is going to hit the market, which is going to make it way, way, way less and even more scarce, okay? And so then if you add fee burning on top of that, that basically means that you're burning ETH whenever new transactions are created, and assuming that the network activity stays the same, that you can actually burn more ETH than is created by the blockchain itself. That'd be 2.4 million ETH per year on this all time frame. If you look at the network activity on all, okay, and that offsets the amount of ETH getting created. And so if on longer time horizons, assuming the network activity for ETH is sustained, okay, then essentially ETH will actually become deflationary. So the infinite supply issue won't even matter, like, at all, in terms of people not having, like, in terms of people's ETH becoming worthless relative to the new ETH that's hitting the market. It actually will have a theoretical max supply after this. That's the whole point. So the whole idea here is that it will probably be a peak ETH amount of about 119 million, and then that would go down over time because ETH's going to get burned, and more ETH's going to get burned than is hitting the blockchain from the actual thing. And other people talking about, ETH not having a hard cap and Bitcoin having a hard cap and how having a hard cap's better. But they don't talk too much about, Bitcoin, having potential security problems. The closer it gets to its maximum supply. So, I don't know if, have you ever asked yourself what happens, like, when the last Bitcoin's mined? Like what happens? You know what I mean? So basically, miners on Bitcoin right now are paid. Basically, if you run a blockchain, you can get paid 2 ways. In most cases. I'm not just talking about Bitcoin in this case, but most blockchains. This is how Ethereum works right now. Ethereum's a mining blockchain. It's on proof of work. You get paid 2 ways. Basically, whenever someone makes a transaction, sends crypto from one account to another, there's a transaction fee. Part of that transaction fee goes to the miner on Ethereum right now. Before EIP in 1559, it went to the miner. All of it didn't get split up, didn't get burned. And also new cryptocurrency is created by the blockchain to pay the miners. Okay, so post EIP, post ETH2, post merge, proof of stake Ethereum, new cryptocurrency is still going to get created by the blockchain to pay the stakers, and then we're still going to have fees which get paid. Part of those fees go to the stakers as well. And so the whole point of ETH having an infinite supply is that that block subsidy, that block reward is always going to be there to pay people to maintain the blockchain. But Bitcoin has a pretty big problem where what happens if your blockchain doesn't make any new money to pay miners anymore? Well, they have to get paid from fees, okay? And so that's a security risk in and of itself, security vulnerability, that, one of your major sources of funding to incentivize people to run your network to make it secure, just dried up completely. Okay, so the ETH infinite supply issue actually is, it's a feature, not a bug. That's a very, very, very long-winded explanation of that, but it's an important one because it is something that most people don't understand, and most people are just going to get left on the sidelines because of kind of senseless, rhetoric that keeps getting thrown around about Ethereum when they don't understand why it works the way it does and why it's actually a really good thing, especially for the asset over the long term. So, let's look at a couple other things that have popped up. If you ever want to take a look at. So we did see some stuff happen over the weekend with Avalanche in particular. I haven't looked too much into this yet. but people are talking about it, so I'll bring it up. Basically, Avax drops 11% after self-described whistleblower says Avalanche weaponized litigation against rivals. Okay, and there's been some mudslinging over this. People fighting on Twitter back and forth. I don't have enough information to know exactly what's happening here. But definitely something you want to keep on your radar. Okay, so if y'all have any significant input on this, definitely leave a comment in the live chat below. But the TLDRs are some drama going on with the Avalanche ecosystem. Whistleblowers saying that they are basically weaponizing their legal team against rivals in the ecosystem. I don't know what's going on with this just yet, but we can look into it more. We can talk about it. I just don't want to give any real strong opinions on something until I've had enough time to digest what's happening here, and also, see what actual information's come to light. I don't want to just spread fake news or FUD on something that I haven't really taken the time to do due diligence on. So, but probably want to keep it on your radar. So another big thing, especially in the tech development space, is we have zkSync going live on mainnet in 60 days. Okay, so we've got a lot of really amazing stuff to look forward to in the ETH space. Of course, we got the Ethereum merge probably on September 15th. We don't exactly know when it's going to happen because of the total terminal difficulty. That's what makes the blockchain actually program the transition. We got the Bellatrix upgrade going live very soon, okay? And then that tells the ETH blockchain when to transition to proof of stake, and it does it based on the total terminal difficulty, which is the threshold that it has to cross in terms of mining difficulty on the blockchain itself. And the best estimate for that's about September 15th. Last week we talked about how that could actually be earlier than people think. It could be as early as September 10th based on the range of estimates, but it also could be as late as September 20th. And there's so many factors that have influenced that, like the ETH price, energy costs, all that type of stuff. But in addition to the ETH merges coming up, we have zkSync 2.0 going live on mainnet, which is a pretty big deal. I'm super excited about this. This is the zk EVM, so zero knowledge rollups, Ethereum layer 2 scaling solution. So one of people's biggest complaints about Ethereum is too slow, it's too expensive to use, and there's a huge misconception that ETH 2.0 or the ETH merge is going to fix that problem. I'm still seeing major influencers say how excited they are about ETH 2.0 because it's going to fix ETH gas fees. It's like, bro, it's not going to happen. So that's the unfortunate news, but the good news is you don't have to wait for ETH 2.0 or the Ethereum merge to fix that problem. That's what layer 2 scaling solutions are for. So that's building a second layer on top of Ethereum where you can settle the where you can, piggyback off Ethereum's security and then actually, use that to create like the second environment where you can do transactions and get that scalability benefit of faster, cheaper transactions and still paying the gas fees with Ether. So I'm super excited about zero knowledge rollups. zkSync is a pioneer in that space. Again, the zk EVM is going to let people take solidity smart contracts and compile them and deploy them to the zk EVM without having to learn a new programming language, which is huge because it means that you can bootstrap these networks faster. You can basically, developers can take the apps that they have already and just put them on the zk EVM without having to do everything over from scratch. So that's 60 days away. That'd be soon after the Ethereum merge. And so things are really snowballing in the right direction in terms of laying the foundation for adoption in this space. So speaking of Solidity, I did see a thread come up that is important to comment on, especially for the developers out there. Let me just close some of these browser tabs. Things are getting a little, hold on a second here. Things are getting a little slow. I'm not sure where my tweet went. Hold on. I think this might be it. So speaking of Solidity, people wonder all the time, like, why do we even use Solidity for programming smart contracts? Okay. And I saw this thread pop up, so that was an important one to talk about, because people all the time say, like, we write smart contracts for blockchain. Speaking of Solidity, you're talking about Solidity being used for the zk EVM. So just quick foundation here. Solidity is the programming language that used to write smart contracts. Started off with Ethereum, and then of course we had all these other EVM compatible chains like Avalanche that we were talking about before pop up. Try to bootstrap off of Ethereum's network effect to take developers that already know how to write for Ethereum, and then deploy their apps to other blockchains like Avalanche, Binance Smart Chain, Ethereum Layer 2, so all that type of stuff. Okay, so Solidity is a programming language for writing smart contracts, and people wonder all the time, like, why do we even have to use Solidity in the first place? So I'm gonna bring up this thread. I'm not gonna treat this thread as an official source of truth here. I'm gonna bring it up and actually discuss some of the major points, but this was floating around and people were talking about it, so I want to weigh in on it as well. So the question here is, why did the ETH devs invent Solidity rather than use an existing language? So he says compilation size. Let's see here. The screenshot shows that Hello World in C compiles it to 33 kilobytes, but you see the Hello World in Solidity is only 336 bytes. Maybe Solidity sucks, but the existing alternatives aren't viable. So we see some sort of like weigh in on this. So the reason Solidity was invented is because there was no scripting language for smart contracts unless you count Bitcoin script. Compilation size was not an important factor in the list. So let me see a reply here straight from Vitalik Buterin, basically saying, hey, Solidity was created by Gavin Wood, not Vitalik, and also statically compiled C can do similar size binaries, so that doesn't really matter as much. So let's actually take a look at Vitalik's sort of emphasis here. So basically, mainstream languages are not designed for smart contract programming, okay? So things contracts require that regular code does not, so very small code size. That is a point in favor of the original post, okay? Much higher focus on safety, okay? And a much higher focus on audibility. Basically, misleading code in a program is very bad, so we need to be very explicit, very simple when you're talking about smart contract code, source code. And then perfect determinism. Okay, so there's still some merit to what the original post is saying here, but you see this original thing here. Here's the reply. Why can't this is from 2018. Why can't Ethereum smart contract be programmed in mainstream languages like JavaScript, Go, or Python? Why is a new language Solidity developed? And even now, a different language, Viper, is being developed. Though it's similar to Python, it is not Python. So at the end of the day, Solidity accomplishes the things that the original post is talking about here. It does have a pretty small footprint, but it does have these other things right here. Now, I realize that a lot of people hate on Solidity because they think it sucks as a programming language. There are some things that are certainly left to be desired with Solidity, but at the end of the day, it's here, all right? It's gotten network effect. It's used in so many places, and for that reason, it's not really going away. So it's a similar type of thing with JavaScript. I mean, I still recommend a lot of people learn JavaScript, especially if they're starting out for blockchain, because you need to learn Solidity, but you typically need a second programming language. JavaScript itself has a lot of things that are left to be desired, but JavaScript's a pretty old programming language at this point that's gained quite a bit of adoption and network effect. And for that reason, especially if you're starting out and you don't know what to do, then you want to go where there's a lot of people who speak the same language. So JavaScript has become the lingua franca of the web, and in many cases, Solidity has become that for blockchain as well. We're talking about smart contract programming. So that's sort of a frequently asked question that I get all the time. So some pretty important points on it and what you need to know. So I'm going to wrap it up there for today. As always, smash that like button down below for the YouTube algorithm. Subscribe to this channel if you haven't already. They'll let you see the videos out, so people learn about blockchain. And if you're as fast in these technologies as I am, you want to get your hands dirty, actually learn Solidity, become an in-demand blockchain developer, you go to my YouTube homepage. You can find those free courses there. They're like Udemy courses, but they're totally free. I just put out a brand new one, a 4-hour course on Solidity. If you like those, you want to take the next step, or hey, maybe take a master's workout entirely. I should have mastered blockchain step-by-step start to finish over at dappuniversity.com/bootcamp. Show you how to land your first blockchain job. You don't have to be an expert to get started today. Help people with zero coding experience become real-world blockchain developers in a matter of months. So that's all I've got. And until next time,